On paper, we were 10 points away from an all-time high. So, frankly, that really is immaterial. What is important here is are the internals here. And that, I guess, is something which is important. Now, whether you add another 10 points and make a new high on the paper, that's purely academic. That does not change the trajectory of the market. I mean, if you would have added another 10 points more, yes, it would have been a new high on the paper and we would have celebrated across media channels and dealing rooms, but that's really theory. What is important here are the internals. And that's where I think the market, I think for me, is clearly indicating that it really wants to go higher. While one thing I've learned over the years is that if the market is in a momentum groove, it will remain in a momentum groove. While you can argue about the pace of the rally, the one-way move, the flows have been unprecedented, but there is no evidence which seems to be indicating that the market wants to retreat or flows they really want to turn very sharply. While we are talking about a linear move in the market, bear in mind that there is a lot of frustration in the market. Folks who have not participated, naysayers were waiting for the market to come down. And before we talk about what should be the strategy of the day, I may just want to remind everybody a famous quote from Sir John Templeton, which is that more money is actually lost when you're waiting for the correction rather when the actual correction occurs. And I guess that really is the truism in this market, which is that everybody is waiting for the correction. Everybody is hoping that, okay, we will buy, but we will buy on a 5% decline, a 10% nick. We want to buy a favorite mid-cap stock, but we are waiting for the correction. Guess what, guys? The correction is not coming. The market internals are telling you that market wants to go higher. Whether it is the psychology of the market or whether I understand the market purely based on maths and physics. Maths is valuation, which is looking attractive. Psychology is naysayers who will keep on pushing the markets higher, and physics is Newton's law of motion. An external law of motion which is in motion will not stop till the time external force is not applied. So psychology, physics and maths, if I put everything together also, market should go higher.
The only thing in the anatomy, let me add one more subject to that, has been that sell figure from the FIs yesterday and 1,000 odd crore rupees. I don't know how much to read into that. That could well just be an aberration.
It could be an aberration, and if it becomes a trend, which is that you get 4 or 5 days of sell flows, then you would ask yourself that has anything changed. Now let's understand the factors which are driving the flows. Money is coming out of China. That theorem has not changed. Money is moving into mid and small cap stocks, that has not changed. Emerging market funds are getting flows, that theorem has not changed. And constructively, earnings in India, I think, are much better than what is happening in the world. Now, till the time these 4-5 factors do not change, I guess it would be hard to make a case that flows will reverse decisively. See, Aisha, money will always move to a performing market. Money will always move to a market where there is near-term growth. India is the performing market and there is near-term visibility. So why? Why is the question?
Yeah, there's no reason to get out of the market, and that's a 360-degree analysis for you on the markets, right from physics, psychology to what's happening mathematically and anatomically in the market. So that's the 360-degree analysis. But the other space that we've been watching out very closely is what's happening to NBFCs. Of course, for the last couple of days, we got fresh brokerage notes and they were quite positive. But if you look at the YTD moves of the counters, that's pretty much in the price as well, and that's what price is telling you. While the likes of Chola Invest, etc., is up around 55%. If you look at the banking names, they have underperformed quite a bit. In fact, even M&M Financial was up 31%, L&T Financial up 32%, and that compares with the banking heavyweights, which have usually moved anywhere between 5 to 10%. Yes, there could be one-off cases like IDFC First Bank, which have managed to post a 30% move. But other than that, ICICI Bank is up 4%, Kotak Mahindra Bank just flat, HDFC actually down for the year. And Nikunj, valuation-wise too, NBFCs are now trading at what? Bajaj Finance, for instance, 6 times the forward book, HDFC is 4 times private, forward book. So not very cheap, but still not very expensive if you look at the, the averages that we have seen and also the peak that we have seen on valuations for NBFC.
Anisha, NBFC is like an ocean. You got Manappuram Finance, which is in gold finance. You got Bajaj Finance, which is a radar-driven retail NBFC. You've got HDFC Limited, which technically is an NBFC, but it is an HFC. And then you've got Shriram Transport right in the middle. There is an Aditya Birla Finance, which is a play on retail, insurance and mutual funds. So NBFC in general cannot be compared as one linear homogeneous basket. But the trend which I think is at play in NBFCs is the following, which is that interest rates have peaked out. and demand is strong. NBFCs borrow from the wholesale market, especially if you are in the lending business. And from the wholesale market, if interest rates are moving higher, and in the first leg of interest rate hike, banks will always benefit because your deposits are priced lower and the credit disbursement is at a higher level. Because NBFCs are borrowing from the wholesale market, they always end up borrowing at a higher cost in a rising interest rate environment. But when interest rates they peak out, the cost of borrowing peaks out. But if the underlying demand is strong, and if banks they become slightly risk averse, then NBFCs they tend to gain market share. So what I'm saying is purely what has happened in the past, that when interest rates they peak out, and or interest rates they turn benign, and if the demand in the economy is strong, I think NBFCs will do well. And now wholesale dominated NBFCs I think will do well rather than the retail dominated NBFCs. Because the play now, what we saw, let's say in a rising interest rate environment, was with corporate banks. I think wholesale NBFCs now have an edge at least in the near to the in the near term. So I will not be surprised that in the near term retail focused NBFCs may start underperforming. Wholesale based NBFCs may actually start outperforming for some while. So that trend I think is there. See, NBFCs lost their mojo after IL&FS crisis.
Yeah.
With the exception of a Bajaj Finance, none of the NBFCs have done well. They really lost their mojo. Look at their price, their books had to be contracted, they had to be bought down because of risk measures. The Reserve Bank of India was also actively managing the risk there. So that heyday has not come back. And I don't think that heyday will come back because banks are now lending. See, wherever NBFC is doing well, banks are not lending.
Banks were not lending.
So banks are lending now. So it's not going to go back to the halo days, but yeah, there's a tactical move in the short term in some of the NBFCs.